Hello and welcome to the Airline Weekly Lounge. I'm your host Gordon Smith and I'm joined by Jay and Meghna Maharishi. In this special episode, we're making sense of the proposed merger between Allegiant and Sun Country Airlines. Yesterday, on what was shaping up to be a regular quiet Sunday, the US airline industry got abruptly woken up from its afternoon nap. Allegiant Air and Sun Country announced that they're merging, or at least going to try to merge, in a deal that signals how quickly consolidation pressures are moving from theory to reality. We're recording here around 10 a.m. on January 12th, and we've just had an investor call held by the leaders of both companies, which my colleagues Jay and Meghna were listening into. Meghna is also just off the phone to Allegiant boss Greg Anderson, so it's safe to say that we're in a good place to help make sense of all of this. Jay, Meghna, welcome to the show. So many places we could begin, but Meghna, kick us off. For any listeners that are coming in cold to this story, what happened yesterday?
Yeah, so this is a $1.5 billion merger. Allegiant is buying Sun Country at a 20% premium, and it's just going to create a bigger ultra low cost carrier. We haven't really seen a merger between two ultra low cost carriers at all in the US, at least one that is most likely going to be approved. Obviously, there's been on and off discussions between Frontier and Spirit, but this is the first time we're seeing a deal between two ultra low cost carriers really materialize. And they're both, similar airlines, but also different at the same time. Like Allegiant is known for kind of operating a lot of these like smaller markets and connecting those smaller markets to very popular leisure destinations like Vegas, Florida, the Caribbean. Sun Country is kind of similar, except they operate mostly out of Minneapolis, and they also connect their customers to those popular leisure destinations. But Sun Country also has a very big cargo and charter business, and actually some of that cargo growth has been outpacing their scheduled passenger service.
A great scene setter, so many themes that I'm sure we'll pick up later on in the conversation. I want to bring in Jay. It's fair to say you've seen a few mergers or attempted mergers in your time, Jay, looking at this industry and all of its wonderful quirks. You've been taking a look at some of the financials between the two companies. Give us a bit of a top line headline take around the numbers there.
Yeah, thanks, Gordon. So I will go over just some of the recent financial performance of these two airlines to give you a sense of the position they're in going into this transaction. Sun Country, very straightforward. They, in 2024, earned an operating margin of 10%. This year, for the first 3 quarters I'm sorry, 2025, for the first 3 quarters of the year anyway, they were at 11%. And then if you go back to 2019, they were at 12%. So very consistent. They do have that very unique business model with a lot of the cargo and charter diversification. And they've been able to perform very consistently, as I mentioned, throughout both the pre and post COVID periods. Very different situation for Allegiant. So Allegiant in 2019 had an operating margin of 21%. So this was one of the super all stars of the global airline industry, at least in terms of margins. Obviously, a smaller airline, so they kind of flew under the radar for most people, particularly outside of the United States, but just a very, very, very successful airline. Now, in 2024, their operating margin was just 7%. So, if you're JetBlue or Frontier or Spirit, 7% 2024 looks great. But if you're Allegiant looking in the mirror or looking in the, rear view mirror, that 7% is like, okay, we've got some issues here. In 2025, first 3 quarters, only 5%. So you can see that Allegiant has had some post-COVID problems. And without taking up too much of everybody's time here, if I may, Gordon and Meghna, I just have a few that I wanted to mention, and we'll certainly go into much more detail in the upcoming issue of Airline Weekly. But I'll start by saying this. So at one point in last year, 2025, Allegiant's aircraft utilization rates, very important measure of productivity, 20% below their 2019 levels. Now, for those of you familiar with Allegiant, you might say, well, what's wrong with that? This is a low utilization business model, right? I mean, Allegiant has this unique situation where they actually make money by keeping planes on the ground. And we can explain that on another podcast, but they have that business model where they're really only flying the planes in peak demand periods. However, it's while it's true that Allegiant is not flying their, planes 12, 13 hours a day, it still makes a big difference when you're flying only, let's say, 5 or 6 hours versus 7 or 8. So that's been a big productivity issue for them, and that's goes a long way towards explaining, their, kind of the difference in how well they were performing in 2019 versus today. Okay, so I'm gonna say a few reasons why their utilization is down, while also mixing in a few other kind of challenges that they faced. So one is that coming out of the pandemic, they did face some pilot shortages, some operational issues. At one point, they gave their pilots a pay increase before they actually signed the new contract. They still have an open contract. They're still, negotiating a new contract with the pilots. But at one point, they actually gave them a pay raise without getting any commensurate productivity gains. So that was temporarily very hurtful to their earnings. They also had a rough hurricane season in 2024, a mild one in 2025. That was helpful. They had, Max delays, Boeing Max delays coming out of COVID. They had some IT issues transitioning to the new reservation system. And then in terms of markets, Las Vegas has been very weak for them. Las Vegas, and this has nothing to do with the aircraft utilization issue, as I mentioned, but in terms of demand and revenue strength, Las Vegas at one time was very rock solid for them. And I'll read this one quote from Allegiant this is from their third quarter earnings call. They said Vegas still underperforms where we'd like it to be. Maybe on the seasonality front, it's historically been a very unseasonal market. Pre-pandemic, it was very reliable year round. It definitely feels more seasonal today than it had, which is unfortunate given how much of a rock star it has been for so long. So that just kind of speaks, right from the horse's mouth there about Vegas being just not the market that it used to be. And I'm sorry to drone on. The last thing I'll say is that this is an airline that is very, very Florida exposed. However much they're associated with being Las Vegas, that's their headquarters. That's at some points of the year, it's their biggest market. But at the end of the day, Las Vegas, only about 5% of their seats touches Las Vegas. That's from Cirium DO data. I could tell you 32% of their seats over the past 12 months touch Florida. So Florida, extremely important. They haven't said anything about Florida being anywhere near uh, experiencing the same kind of distress as Las Vegas. But I do suspect, and we talked about this, Gordon, in our previous podcast, that Florida may not be the strongest market right now. So I say all of this as a prelude to explaining why Allegiant might have been thinking about doing some kind of merger, some kind of transaction that would give them a boost. And I'll stop there. You can, follow up questions. But there are I do see this as a deal that has little risk and quite a bit of upside for Allegiant. So there's quite a few different motivations uh, for why they would do this. And I think at the end of the day, it all sounds pretty compelling to me.
Well, we'll get onto the regulatory elements in a bit, whether the competition watchdog will like what they hear. But yeah, just going back to your utilization rate, I remember flying with Allegiant in the mid 2010s, and they had the Mad Dogs, the MD-80s, and they were sort of the poster child for low utilization because these aircraft were so depreciated. They could afford to be on the ground, even though they were thirsty and noisy and everything else, because they didn't really cost much in the first place. But obviously, very, very different with all the new aircraft that are Allegiant getting. They definitely have higher costs there. Meghna, let's bring you back in because you are literally off the phone to Greg Anderson, the CEO of Allegiant, in the past 30 minutes or so. what was the tone? Obviously, you both listened to the investor call, but a one-on-one conversation. Were there any additional nuggets there?
Yeah, I think, Greg Anderson, he really emphasized how he thinks this is a very, like, complementary merger, how they have very complementary networks. They really only overlap on one route, and I believe that is Appleton, Wisconsin to Fort Myers, Florida. So I think he sounded very positive on the call, and he seems pretty confident that this is a merger that will most likely get approved. Also, it has support from both of the airlines' boards. So overall, I think he seemed like he had a pretty sunny tone, and I think another thing he emphasized that, sort of how this merger will give, I think, both of these airlines an ability to grow. I mean, even in the case of Sun Country, they're mostly based out of Minneapolis, and you can only grow so much in that region. So I think there's a lot of hope that this merger will give them more leg room.
And yeah, it is important to contextualize this. We are talking about two scheduled US airlines, Meghna and Jay, but they are two of the very smallest of the pack. So, Jay, just help us put this in context. Assuming the deal does go through, we're not talking about a new superpower emerging here. You're not going to have the Uniteds and the Americans and the Deltas of this world worried, but it is going to be a more powerful force, particularly in the leisure market.
It will be. So they'll have a combined, it looks like, and again, this is using Serum Fleets data, but looks like they'll have a combined, well, let's see, Allegiant has 121 active planes right now. And it looks like Sun Country has 64. So you can, do the math, but we're getting, close to 200 there. And so, yeah, not a small aircraft, but as you mentioned, they're certainly not going to be giant. Um, Magna said something, I think important that I just wanted to maybe expand upon. Mention how Minneapolis has growth opportunities. Now, one thing about Sun Country, when you're thinking about what was their motivation for selling here, they were short of aircraft, and they have no aircraft on order right now. And if you think about Sun Country and their management, which Jude Bricker, their CEO, actually originally comes from, he was at one point leading Allegiant, and one of his um, and Sun Country's sort of I don't know, specialties, or one of their strengths is negotiating good aircraft deals. I mean, it's what they have, a team there that has just had a lot of experience with that, a lot of success with that. And remember that we are facing a narrow body aircraft shortage, and we have been for a couple of years. So it's been very difficult for them to find attractively priced aircraft to grow. So they've got nothing right now. I mean, nothing on order. And when they're looking around, and you're never in a comfortable position when you're not growing or don't have any growth prospects, because that has, negative implications for economies of scale, and your employees don't like it. And, customers expect more options, and your loyalty program doesn't benefit. So you can see why they would be very open to combining with another carrier. They do, by the way, also, they are so heavily Minneapolis exposed, and Minneapolis, St. Paul. And it's a good market, but it's still always, there's always some danger inherent with being overexposed to just one market. They're also a little bit kind of dependent on the kindness of strangers there. I mean, Delta competes vigorously at their Minneapolis hub, but if they wanted to, they could compete more vigorously, and they choose not to. But that is a vulnerability, and then just the vulnerability of being, an airline with sub 100 air aircraft fleet is, you have fewer suppliers depending on you and whatnot, and there's some just inherent invulnerabilities in being small. So easy enough to explain why Sun Country wants to sell. The more interesting question is, why did Allegiant want to buy? And I kind of mentioned some of their problems, some of their challenges, and why they might be thinking about, or looking for a reason to sort of inject some new momentum into their business model. And then when you look at the promised benefits of this merger to Allegiant, I think I'd kind of loosely, at the risk of oversimplifying, I'd put it into four buckets. They have the loyalty synergies, and it looks like, I think Jude Bricker from Sun Country said on the call they have about 2 million frequent flyer members in Sun Country. And it looked like Allegiant in their annual report from 2024 had about 20 million. So it's maybe a little bit higher now, but, Allegiant's quite a bit bigger, but you do get that extra extra synergy there on the loyalty programs. That's number one. Number two, you get the fleet synergies. I talked about, how um, from Sun Country's perspective, you have access to Allegiant's very ample order book with Boeing for a whole bunch of Maxes. They have a lot of options too with Boeing that now they're more likely to convert those options with new network opportunities. And that's kind of the third bucket is the network synergies here. And if you think about things they can do from Minneapolis now that Sun Country couldn't do on their own, connecting to some big Allegiant markets like, I don't know, I think of Cincinnati or even some of the leisure markets like, I mean, they already do Phoenix, but there's some additional markets they could do there. Bricker on the call talked about some of the aircraft scheduling synergies. I won't go into that now, but those are kind of interesting too. That'll help with help with gate utilization at Minneapolis. And finally, the fourth bucket would be just the balance sheet is stronger, just to get a bigger airline that's more financially resilient. So there you go.
I quite like that bucket option, Jay. Even if it is slightly simplified, I'm sure our listeners are able to decipher the key trends there. And Meghna, just taking a step back and looking at it from a sort of consumer business positioning point of view, Allegiant and Sun Country are often sort of grouped together. I draw parallels to British general election night when you've got Labour and the Conservatives, and then you've got some of the fringe parties that are sort of grouped on a little bar graph called others. It is sometimes tempting to sort of just put them to the very end when we're discussing the US scheduled operators, but they are meaningful airlines and they do have models that are distinctive and they aren't identical. Just talk us through the areas where you think they're going to truly complement each other, maybe areas where they might clash. And is there a risk here, particularly after you listening to Greg Anderson? Are there any risks that this merged airline sort of becomes stuck in the middle between the ULCC and the hybrid carrier model? What do you reckon?
Yeah, so I like Greg was pretty adamant that the business model was fundamentally just going to stay the same even as a combined airline. It was just going to be a little bit bigger. So I think Allegiant is still pretty keen on sort of emphasizing those smaller markets. I do think like one maybe risk point again is, as Jay mentioned, is Minneapolis, St. Paul. Obviously, that's like Sun Country's like main market. They have a very big presence there. They have a pretty loyal customer base. Like Greg Anderson has said that they will still maintain Minneapolis, St. Paul, but do think it's a little bit unclear as to like if they will still maintain that very loyal customer base and that big like Minneapolis like presence there that is like, very synonymous with Sun Country. And then there's also Delta, which is there as well. And Delta is a very big presence at that airport. It's a hub for Delta. Um, Delta can, again, as Jay mentioned, go aggressively after this combined airline if it wanted to out of MSP. So I think like that definitely remains to be seen. I do think like another perk though with this merger, at least for Allegiant, they will get some international routes now since Sun Country operates those to the Caribbean, for example. And I think they will basically be able to expand like their leisure markets, especially as Vegas has been underperforming in recent quarters for Allegiant due to like a variety of reasons, such as inflation, impacting travelers' decisions on whether to go there or not. And I think also some of the US Canada tensions have also spilled into Vegas tourism and have also impacted Allegiant in that sense too. So I think like those are the main, I think, benefits and risks that I'm right now seeing to this merger based off of my conversation with Greg Anderson.
And Jay, probably a bad day yesterday for makers of blue and orange airplane paint. Was it a bad day for Delta? Meghna's been discussing some of the competitive pressures in and around Minneapolis, St. Paul. Do you think, on balance, Delta will be privately quite happy to have Sun Country essentially leaving the picture and being jumbled into this larger Allegiant organization?
I mean, when I'm sitting at the pool in the summertime and a fly lands on my arm, it's annoying, but I just kind of shoo it away. It's just not that big a deal. It's just so small, and when you're Delta, you're thinking more about, flying to Tokyo and London, and, so no, I don't think this is more of a curiosity for Delta. I don't think it really, is gonna come up on their competitive radar screen much. Might this if they start getting real aggressive in Minneapolis, start, adding a whole, start growing 10%. And remember, interestingly enough, that Allegiant is rather large in Cincinnati. That's one of their biggest origin markets now. That's also a big Delta stronghold. So, you can see them maybe growing a whole bunch from Minneapolis to Cincinnati, and Delta maybe getting a little bit upset and retaliating or something. But I think it's very much on the margins.
Stay with us. In part two, we're going to take a look at some of the wider competitive analysis, maybe what it means for Spirit, Frontier, Southwest, and others. Before that, a quick reminder to send any questions or comments that you might have for us to podcasts@skift.com. That's podcasts with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you're listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Don't go anywhere. We'll be right back with Jay and Meghna. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith, joined by Jay and Meghna. We're discussing all things Sun Country and Allegiant. Or should be Allegiant and Sun Country, the dominant partner here. It's not a merger of equals. Jay and Meghna, regular listeners to the show, regular readers will know that we had down in Mexico at the end of December, sort of mega merger down there, Volaris and Viva Aerobus plotting to come together with a very much a merger of equals, 50-50 with each group on a fully diluted basis. This is not that. Allegiant is definitely going to be the dominant factor here. But here's an open question to the both of you. Who do you think is going to be, we already established Delta's not going to be worried with Jay's flower in the arm analogy. Who do you think is going to be a little more nervous given yesterday's developments?
I mean, I'll jump in for I'll say it doesn't really affect anybody too much because so many of these routes are non-competitive. I mean, 75% or something like that of Allegiant's routes don't overlap with anyone else. Now, you have to believe at the same time I say that, a Southwest is probably going to look at this and say, okay, this is potentially a bigger domestic competitor in some, it's look, I mean, Allegiant is getting pretty big in Nashville, and we've talked about how important Nashville is to Southwest. But is it, I think it may be a little bit more serious than the fly analogy that I used with Delta, but is it, a big did a big camel just enter the tent, or I don't know what the right metaphor is, did a tiger get out of its cage or something? Probably not that either. I mean, I think Southwest is still just so much bigger. You're talking about, you know, I don't know, 600-700 airplanes versus 200 airplanes. So they will sort of continue to do their own thing. Now, I say that in a very, very broad sense. If you go market by market, I did mention, the Nashville market. I mentioned the Cincinnati market in Delta's case. Fort Lauderdale is an interesting one. Here in Florida, Allegiant they want a piece of that in the wake of Spirit's, say, imminent, I don't know, what's the right word? I don't want to say imminent demise because we don't know if they're going away, but certainly they're downsizing, heavy downsizing that's already taken place. So they are investing, like many other carriers, JetBlue and others, investing a lot of capacity growth into the Fort Lauderdale market. So they might be a little bit stronger there now with Sun Country. So JetBlue might be concerned there. But I think overall, it's not, it doesn't pose a major competitive threat, or an enhanced competitive threat to anybody. Would you agree with that, Meghna? Does that sound about right?
Yeah, definitely. They're both pretty small enough. I will say it does sort of show though. I think generally in this industry, like having an airline, you can only like grow so much, and then you kind of feel a need to merge. And I feel like that's just the case here, especially given that both Allegiant and Sun Country are pretty profitable, and they have definitely not had the same struggles that a Spirit and Frontier have faced in the past few years or so.
Yeah, I'll say this too. This is separate from your question, Gordon. I think it's an important point to add that one thing this does for Allegiant is it does expose them more to the charter market, which they're already in, and then it exposes them also to that cargo market that Sun Country is in, and that's not necessarily that doesn't automatically means your profits are going to increase overnight just because you're exposed to these markets, but it does create some kind of risk mitigation for them. I mean, just one good example is that the cargo stuff that Sun Country does. that's pretty much a pass through on the fuel cost. So Amazon will pay that, and you can picture a scenario where suddenly, oil prices jump up to $150 a barrel, and the cargo market is still hot, and Allegiant says, "Okay, let's do more cargo stuff." Sun Country's kinda doing that now. They're kinda moving, not for so much fuel reasons, but they're actually growing their cargo business at the expense of their passenger business. Their passenger business is actually shrinking, and interestingly enough, Allegiant's passenger business is shrinking as well this quarter. So they, are looking, that's for various reasons for that, but they're looking for, you can see them looking for new growth opportunities. But yeah, the charter and cargo stuff is a nice, um, risk mitigant for a very, very, very volatile passenger business.
And we should say, as we mentioned at the very top of the show, the deal is still subject to the formal approvals that you would expect in Washington and elsewhere. Jay, you've seen your fair share of mergers over the years. Is there anything in this deal or proposed deal that could slow approval beyond the obvious?
Don't think so. I mean, there's no overlap. They're pretty small. I would be hard pressed to see any impediments here. In fact, they expect to close. Maybe Meghna, this. I think they expect to close the deal like already at the end of this year, right?
Yes, they said second half of 2026.
Second half of 2026. So they don't anticipate too many big obstacles on the regulatory front. I would be very surprised if there would be.
The mood music from Washington as well, generally erring maybe towards a more empathetic point of view when it comes to M&A activity, or at least that's the perspective that many analysts are suggesting. Meghna, is that something you agree with? You've been following the ups and downs with Spirit and Frontier very closely for Skift. Were the specifics of this deal or proposed deal unique, or do you think this could be the first domino in a new wave of airline consolidation?
Yeah, definitely. I think again, the regulatory environment has generally been pretty favorable. A lot of airline executives have said this is probably the time to do like a merger. I think even Jude Bricker has said that as well in the past. I think we can expect to see more consolidation within these next 4 years. Some sort of decision on Frontier and Spirit, I think, is imminent. A lot of analysts think that we will know by the end of January as to whether or not these two airlines will merge. And I think that would be a really big lifeline to Spirit, which is obviously like struggled a lot, especially during its second Chapter 11 bankruptcy. But I generally think like this Sun Country Allegiant merger, I could see it being the domino just to more consolidation happening in the industry, especially as airlines might want to just capitalize on this very favorable regulatory environment.
And Jay, just to follow up on that, is it genuinely a more favorable regulatory environment, or is this just our perspective? Has it been stress tested yet?
Yeah, I would be hesitant to say that. I don't know if there's any. I mean, I think what Meghna is alluding to, which I think makes sense, is that traditionally, the regulatory resistance to merger is tougher when a Democrat is in the White House, and we have a Republican in the White House now. But I think this Republican administration is somewhat different. I think um, we have seen some other mergers where there has been some pushback. So I don't know. I wouldn't consider it a slam dunk if, let's say, Delta were to propose a merger with American, that it would go through. I'm obviously being extreme there to make a point, but yeah, I don't know that um, that there's anything that we should take for granted just because a Republican administration is in the White House. But having said that, the previous administration was so aggressive in, you know, attacking the JetBlue Spirit merger, for example, and some other mergers outside of the airline industry, that I can see why there might be that sentiment prevailing right now.
So much more detail that we will get into both on skiff.com in terms of our daily news coverage, but also in the airline weekly issue. Just the way the calendar gods, they have not been too kind with us. So that news was enhanced last night on January 11th. Our new issue of Airline Weekly dropping today, January 12th, but much more analysis, and we've got a full week to dot the I's, cross the T's, and crunch all the numbers. So January 19th, we'll have much more detail in that issue in Airline Weekly. Jay, Meghna, almost out of time. Meghna, you first. Your closing thoughts on the developments of the past 24 hours, and also where you think the road goes next.
Yeah, I think we're gonna obviously I think we're gonna see more consolidation in the ultra low cost space, and this is just the start of it. I think generally the reception to this merger has been pretty positive, especially from Wall Street. They seem pretty excited by the idea of this merger, especially just from like a financial perspective. Both of these carriers are pretty strong. I think now everyone's going to be waiting to see again if Frontier and Spirit announce anything, especially because just given the position that both of those airlines are in, I think Spirit being in a particularly dire position. So I guess it's really just more of a wait and watch. It does seem like this merger will be approved. I think also a lot of industry analysts do think that the regulatory environment for this Sun Country Allegiant merger will be pretty favorable. And again, there's minimal overlap. But I think the rest of it just remains to be seen.
Jay?
I want to use my last few minutes of time here, if I may, to just say a few words about the Minneapolis St. Paul market because it's just so central to, I mean, it's everything that pretty much Sun Country does. So this is a very strong airline market. It's not a fast growing market. So don't think of it as, you're an Austin or Raleigh Durham or a Nashville or anything like that. But the economy in Minneapolis is very strong. The incomes are pretty high. There's a lot of Fortune 500 companies based there. I've heard Minneapolis, St. Paul described as the Silicon Valley of food. It has, for many years, for more than a century, Minneapolis has been a center of food production. So just as an example, Cargill, which is the largest privately held company in the United States, I believe, is based there. I think their revenues are like comparable to JP Morgan's. I mean, it's just a huge, huge company. And then the other interesting thing about Minneapolis, St. Paul, and for those of you who've read my book, American Places, you'll know this. Sorry, that's a little plug there. But more seriously, you'll know that Minneapolis, St. Paul is huge in the healthcare sector. And if you look at where all the job growth now is, if you look at which sector remained pretty resilient through that really awful 2008, 2009 recession, it's healthcare. So, it was Allegiant looking at that when they bought Sun Country? Maybe, maybe not, but that's something to keep in mind. Minneapolis is a very kind of nice market to have for those reasons. It is, strong economy and pretty resilient economy through recessions with a lot of heavy corporate traffic that, you might say, well, they don't, Delta's getting all the corporates. Well, I don't know. I mean, I think some of that stuff, some of those, some of that money is flying down to Florida and the Caribbean and, Las Vegas and Phoenix on weekends and during breaks. So it's a very, very strong market, I think. And it's why Sun Country has done so well. One big reason.
Absolutely. Meghna, Jay, really appreciate your time on what's a busy day for all of us. Meghna, I know you're going to go off and write up your interview for Skift, so keep an eye out for that. A quick reminder, if you are enjoying the podcast and what we do, why not consider a subscription to Airline Weekly? Go to airlineweekly.com/subscribe. And a reminder that as an Airline Weekly subscriber, you get access to all the airline news on skift.com, plus Skift Research's airline reports. And I think there may be one in the hopper with regard to ultra low-cost carriers from our colleague at Sharp. So keep an eye out for that. Thanks again to Jay and Meghna for joining me this week for this special episode. Thanks as always to our producers, Monica and Will. And thanks for you for listening, wherever you are in the world. We'll catch you next time. Bye for now.
Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please make sure to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, make sure to subscribe to the Skift channel and hit the notification bell to find out whenever a new video drops.